Traders, good day to you. Just want to bring to your attention a potential entry on the British pound versus the US dollar, affectionately known as cable. Before we go to the daily, I just want to show you the picture on the weekly time frame. After all, the weekly time frame governs the smaller time frames. The smaller time frames are merely the smaller cogs turning the bigger wheels. But I just want to give you a bit of context. As you can see here, we're in a downward trend, still confirmed with the moving averages. We've got the 20 EMA below the 50 EMA below the 200, and we've also got interaction with a trend line. Now, I know trend lines are very subjective, however, they do help in the great kind of equation when we're looking at building our case for a trade. So as you can see, we've had 1, 2, 3, 4. This is the fifth interaction potentially with the trend line, providing this trend line holds. What is interesting as well is if we look at our indicators, they're both saying the same thing. Whilst if we zoom into price, we can see that price has made a higher high on the weekly time frame from the 1st of May to the present, i.e. halfway through July. We can see that whilst price has made this high as of last week's close, we've actually made a lower high on the RSI setting 6, which is the setting we use for RSI, and looks like the stochastic is saying the same thing. Now this shows us that we've got bearish reversal divergence, which is where the strength felt amongst the buyers is getting less and less pronounced. So that's a sign that things could potentially be turning, and we are at a technical point here. Not only are we at a long-term trend line, we are also, if we look at the daily time frame, we are actually at the top of a channel, this channel of retracement. We can see that we've had a long and complex retracement ever since the British pound versus the US dollar reached 1.200 or just dipped below it, and we've been seeing this protracted period of time where price has stubbornly been making higher highs and higher lows. You can see here we've got 1, 2, could this be the third test with this channel trend line, which actually intersects almost perfectly with the governing downward trend line on the weekly time frame. Okay, so we've got the intersection of the phase 2 retracement on the daily trend line resistance, and we've also got the trend line resistance on the weekly time frame as well, intersecting with this point. Now, again, on the daily time frame, we do have bearish reversal divergence, more seen in the stochastic. As you can see, again, with the daily time frame, we've been making higher highs and higher lows up to this point, but on the stochastic, we've got a lower high seen here. Okay, so that's divergence, and it's termed as bearish reversal divergence, a clue that the bears are creeping into the market. Now, if you look at yesterday's close, being Tuesday, we've got an outside bar, outside bearish high test. Now, these tell us that we have the bears have rejected this point here, just above 1.3100, and it looks like potentially here would be an entry point for a sell. This could actually fit in quite nicely with a potential longer term move seen on the weekly time frame. Okay, so if we go back to the weekly time frame, we can see that if we get in the explosion before it actually happens, we have more to gain. Okay, so you can see that we last week was a big buyer bar. That's absolutely fine, but we did have this level of resistance breached as well here at 1.292. So the question is on the weekly and the daily, is this level going to hold? We had the close above it. That's absolutely fine. We had an inside bar following, and then we had a bearish pin bar reversal. But if the low of this bar is breached here, the bar seen on the 14th of July, then this invalidates this breakout of this level here. And this level is actually quite significant. Here we go. So if we see the low of the bar, which actually broke out above the 1.300 level, then we can reasonably say that this is a false breakout. And when we're positioned in this kind of move before the false breakout has been confirmed, then it means that we've got far better reward to risk if our entry is below yesterday's low with our stop loss above yesterday's high. Okay, so if you can see this, we can be actually aligned into a bigger move, especially if it takes out the previous low seen mid-July, 12th of July. It takes out this low as well. on the 21st of June. That's even more profit potential. You can see the reward to risk is actually very handsome. Let's take a closer look. As we can see here, if we enter at the low or the break of Tuesday's low with our stop loss above the high, risking this much, and we are targeting the previous swing low or notable low just below the midpoint of this range, then this is an easy 3.8 to 1 reward to risk trade, and that is very good reward to risk. Of course, that is less probable than if we were targeting this swing low here, in which case it will roughly be just shy of a 2 to 1 reward to risk trade. But many traders, if they did like the look of this one, will simply be trading the break of Tuesday's low round about here with our stop loss above Tuesday's high here. And of course, we'll be taking an extra look at Euro on the weekly time frame to see how this one closes as well. A lot of people have been getting their fingers burnt trying to short the Euro, but finally, as expected, despite yesterday's close above this horizontal level here, just above one spot 1485, we can see at a distance whether it will potentially close as a bearish pin bar reversal on the weekly time frame. If it does, then we'll warrant it, or will warrant further investigation. But unlike the British pound versus the US dollar, we do not have bearish reversal divergence. So for now, the British pound versus the US dollar on the daily time frame, for those people who do like the look of it, it certainly looks like it's ready to go. Okay, happy trading, folks.